Welcome back here to TM Signals. Great to have you aboard. I want to go out and take a look at the market vibe here with you today and talk about the neutrality of it and what its significance is for the market, and more importantly, what its significance isn't. In the world, we drive and, we get from one place to the other, and a lot of us are familiar with stoplights. And stoplights go from green to yellow to red. And what does it mean? Well, if the light's green, means you have the right of way, you can go, you can proceed, continue to move forward. And then there's this yellow. And what does yellow mean? Well, yellow means, hey, slow down because we're going to red, which means stop. Okay. Well, in the market vibe, we essentially have green, yellow, red, but it's a little different than a stoplight because, and imagine driving down the road and you go from green and then you see yellow, and then what's it do? It turns green again. That would be kind of, wait a minute, no. But that's how our minds are trained, is green, yellow, then red. And so there's a perception that with the market vibe, when it goes from bullish down to neutral, well, the next step logically is bearish, right? So, okay, down we go. But that is not the case. And we've seen it several times this year where the market vibe has gone from green, okay, from bullish essentially, to neutral, and then back to bullish, and then back to neutral, and then back to bullish without going bearish. Now, we are seeing some of the internals of the market vibe erode and, move on lower. But this element of bullish, neutral, bearish doesn't just come into the market vibe, but comes into individual stocks. Today's market, 2017, is very different than a 2011 market. Let me bring up Apple, for example. Here's Apple, and I have just the candlestick chart of Apple for 2011, and I have an indicator down here below called the MACD. Now, I use the MACD because most of us are familiar with the MACD, but if you're not familiar, it's just a simple momentum oscillator, meaning when the stock goes up, the MACD goes up. When the stock goes down, the MACD goes down. And the common kind of read on the MACD that, is published out there is, when the black line crosses up above zero, you buy, right? Because the stock's going to go up. When the black line crosses below zero, you sell because the stock's going to go down. But that's not always the case. So some will take it and say, well, when the black line goes above the red line, you buy. And, when the black line goes below the red line, you sell. But again, that's not always the case, all right? But that's just the general read. But typically, and with almost every stock, when the MACD is going up, the stock's going up. And when the MACD is going down, the stock's going down. Up and down, up and down. And that's just been the way most stocks have been for many, many years. But over the last 2.5 years, we've seen a change. We've seen a difference. Let me bring up Apple today. Let me put the same MACD onto Apple and show you why it's a little bit different or what's happening here. Here we are in February, okay? February, January of this year. MACD's going up. What's Apple doing? Right? It's going up. Great. Nice. But take a look here at March. Take a look at the MACD. MACD's going down. If we were back in 2011, we wouldn't even have to look at the chart of the stock because we would know Apple is going down. It's obvious. Apple's prices got to be going down for the MACD to go down. But no, what happened? Apple stock continued to rise. And so technicians are trained to say, hey, you know what? This is negative divergence. MACD's going down. Apple's going up. That means that Apple's eventually got to fall here. But that's just not been the case. One of the changes that this market has gone into is it stopped going from bullish to neutral to bearish to neutral to bullish and working like a stoplight. It has gone into working like a, just green light, yellow light, green light, yellow. And so some of these signals that in the past were pretty darn bearish, they're not bearish at all. They're what? They're neutral. And we're not seeing neutral kick into bearish. We're seeing neutral eventually kick right back into bullish with many stocks out there. And we're seeing that with the market vibe. And so some of the elements of the market vibe have kicked into some kind of ugly territories. Let's break down 4 of them. One thing that the market vibe takes a look at is the bullish percent index. And the bullish percent index is used in the algorithm for the market vibe. And the bullish percent index basically tells us how many stocks are bullish versus how many stocks are bearish using point and figure charts. If you're not familiar with point and figure chart, no worry, but it's just a simple breakdown. When we're up here at 80, what's that saying? Well, that's saying that 80% of the stocks in the market have bullish point and figure charts. When we're down here at 50, that means, hey, it's 50-50. 50 are bullish, 50% are bearish. Well, where are we at right now? We're at 66. So 66% have bullish charts, 33% have bearish charts. But what's significant about the bullish percent index is that when we're on the decline, generally we're going into a bearish mode, okay? In fact, from a pure bullish percent index standpoint, the literature says, hey, a 6% move in the bullish percent index in either direction triggers a new signal. So technically, bullish percent index is on a bearish signal right here, okay? Is it bearish, though? Is it something where we're talking about bearish in the way that we have in years past? Or is this similar to Apple where, what are we doing? We're just coming back down to normal. 50%. We're coming back to the median. We're coming back to that midline. The bullish percent index has been doing that for the last year. Okay? When it is pulled back, it's not necessarily been bearish. And here's a weekly, right? Its pullbacks have come back here to 50%. This wasn't, the market's ready to go on a big bad bear run. This is just convergence back to normal. So we're seeing the bullish percent index pulling down. Yeah, that's typical of something we've seen ahead of pullbacks. And it's something that, yes, makes me uncomfortable about more upside short term in the market. But what we have continued to see, like the MACD with Apple, is that, okay, when things go into neutral, they're not necessarily, the indicators aren't necessarily bearish, they're just moving back to their midline. Like Apple moving back to 0 on the MACD, back to that midline. So here, bullish percent index, are we just moving back to the midline, or is there something very bearish here? Okay. When we look at other indicators, we can see the same thing happening. Take a look at the number of stocks setting new highs versus new lows. Okay. Here we are. Back here in January, December of last year, February, March, a lot more stocks setting new highs than new lows. Okay. The 0, the midpoint line, okay, where we have the same number of stocks setting highs as setting lows, is down here. The market's been in bullish territory, so yes, many more stocks setting new highs than new lows. But what's been going on over the last months? We've been coming down, down, down. And so even though the market's been setting new highs, the number of stocks setting new highs has not been as great. Generally a sign of, hey, you know what? We got some bearishness to come. We're probably going to see a bearish breakdown in the same way as we look at the bullish percent index. But the question has to be raised. Is this bearish, or is this just a return to neutrality? We see this in other indicators that the market vibe uses. Let's go into let's go use the NYUD, okay, which is volume, okay, volume related. And if we come in, it uses a cumulative version of the NYUD, okay? And let's just get rid of our indicators. We don't need any of those. But basically what happens is if the market goes up, it adds the volume to it. If the market goes down, it subtracts the volume to it. The absolute number doesn't mean anything, but we can start to see, hey, you know what? Where are some of the volume trends? And you'll notice what? Over the last year, the upside volume, downside volume has pretty much been the same. When it comes to the New York Stock Exchange, it's been about the same. We have not seen a big volume buy-in or a big volume sell-off. Yes, some volume on North Korea helped to push it down. A little bit of volume early summer helped to push it up. But we have not seen major money flows in or major money flows out of this market. Are we going to call that bearish? Are we going to call that bullish? Right? If we're going from green light to yellow light to red light, then obviously we're going to look and say, hey, this is bearish, right? Because we're green light back here, green light, green light, green light, yellow light. So what comes next? Has to be a red light. That just has not been the case in this market. That has not been what the 2017-2016 market has been. So we're in neutral territory here. Whatever indicator market metric-wise I bring up, we're going to see something very similar. We're going to see this move to neutrality. We're going to see this move where the indicator is, yes, moving on down in a bearish direction, but still in a bullish territory, okay? And moving closer to zero or normal or neutrality, whatever you want to call it there, yellow light. What will it take to get out of this? What will it take to say, hey, you know what, here's a brand new bear signal or a brand new bull signal? We got a little bit of kickback last week because, hey, we had North Korea and the MarketVibe didn't trigger bearish. Well, no, it didn't, right? And for good reason. We didn't see the internals break down. We didn't see the metrics. Yes, there was some fear that came in. Great, we see that happens. But, we didn't see much of a pullback. Triggered neutral before the whole thing. And, all right, little pullback, little bounce back. Market hasn't gone anywhere. But what happens here with this? Well, when it comes to which direction the next move of the market is going to take, it comes down to catalysts. And not just catalyst, but is that catalyst strong enough to move the internals? Does it move the bullish percent index? Does it move the volume needle? Does it move the number of stocks advancing versus declining? Number of stocks hitting new highs versus new lows? Does it move the number of stocks trading above 50, 20, 200-day moving averages? Does it move international indexes, a small cap index? Does it create an oscillation that is significant? So far, we've not seen a lot of that. And it's why we didn't get any kind of bearish signal last week, because the oscillation wasn't good enough in the market internals to create, that type of move. So we need a catalyst, and then we need it followed by the metrics showing, yes, money is actually really moving. And last week, we didn't get that. We got a catalyst, but we didn't get the actual money is actually moving. Now, if we're just looking at the index and the SPY and saying, hey, you know what, the SPY is falling, it must be bearish, blah, blah, blah. Sure, we'll get caught up into that. Oh, it must be bearish. But the market internals just didn't move enough with the catalyst to say, hey, this is bearish. And in a very similar way to what it did right back here on this down day in May, this down day here in March, we just didn't see enough in terms of the market internals moving to say, hey, those catalysts are enough to suggest further bearish trend. Now, so far, we haven't had enough in the market internals to suggest new bullish trend, but it's getting close. It's getting close. A little bit of uptick could do it, but, still not there. Even after, the rally we saw on Monday and a little bit of rally yesterday and a little rally this morning, still not quite there. But those are the two things, catalyst and internal movement of the metrics. And when we have those two together, that's what will create a fresh new signal on the market vibe, whether it be bullish or bearish. And I'm not going to sit here and tell you, well, the next signal is going to be bearish because we're in neutral. This isn't a red light, green light, yellow light situation. This is one where, you got to think of it. You're driving down the road. Yeah, you see yellow, so you slow down, but that could pop up green at any time. And, we have seen that has become the nature of the market, where technical indicators gravitate towards neutrality as stocks consolidate. And then we see a slight uptick or slight downtick, depending on which stock as they break up or, break down. Hopefully that helps to understand a little bit more about the market vibe in this current market situation. The market vibe is algorithmic. It's not a judgment call by any individual. It is something that is, pure mathematics in terms of, what do the metrics say and how are they moving. And the results, even in a market that has been more heavily neutral than ever before, they speak for themselves. And when the market vibe is neutral, the average daily gain is really, the market doesn't really move. When it's bullish, most of the time we're talking about green days. And when it's bearish, most of the time we're talking about red days. And, the market vibe will continue to be very effective as the market changes, as the market evolves, and as the market, makes its next big moves. I'm probably like you and wish that we could take it off of neutral and put it into either heavily bullish or heavy bearish. But that's not the reality of what the market is, at this moment. If you're not part of TM Signals and would like to get the market vibe each and every day, go ahead and sign on up. All you have to do is go to the front page of TM Signals, put in your email, and you will get the market vibe alert into your inbox a few hours before the close of the market each and every day. Have yourselves a great one, and we'll talk to you later. Take care.